Welcome. In this video, will ZBCN coin come ATH again? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most notable and frequently observed structures in technical analysis, the flag formation, can be clearly seen in the current chart. This pattern, especially when it forms after a downward movement, is typically considered a sign of a correction or consolidation phase. The current price behavior aligns well with this definition. The structure represents a flag formation that developed following a strong downward move, followed by a brief pause, with price moving between two parallel lines. Although this may appear to be a classic downward correction, there have been many instances where such flags break to the upside. The technical meaning of this type of formation is quite clear. The lower boundary of the flag typically represents a short-term support level where buyers begin to step in, while the upper boundary signals a resistance level where sellers apply pressure. What makes the current situation unique is that, unlike traditional bearish flag formations, it has the potential to signal a bullish move. Especially if volume analysis, momentum indicators, and other supporting technical factors also point in the same direction. These flag formations can be interpreted not just as a correction, but also as the beginning of a new upward trend. The current consolidation zone is building tension like a coiled spring. Each touch adds to the potential energy, and a breakout could unleash a strong move. Particularly, as price begins testing the upper boundary and forms higher lows with each test, it shows that buying pressure is increasing while selling pressure is weakening. If price breaks above this upper boundary with strong volume, it could confirm a trend reversal to the upside. Such breakouts are often interpreted as signals of reversal and may lead to a bullish surge. In addition, the psychological aspect of these patterns should not be ignored. Market participants are often aware of such formations and tend to watch the breakout points closely. Once the upper boundary is breached, pending buy orders may get triggered, short positions may get stopped out, and new buyers may enter the market. This not only pushes prices higher, but may also cause the move to accelerate. For this reason, breakouts from such structures often signal sharp and significant market moves. Technically, the upper boundary of the flag acts both as resistance and an opportunity zone. A strong move above this line would not only invalidate the current flag formation, but also indicate that buyers have gained control. From this point forward, price may begin targeting previously tested but unbroken levels. Additionally, the projected target for an upward move is often equal to the height of the flagpole, the initial drop preceding the flag. This suggests that the move may not be just a small bounce, but the beginning of a larger rally. A noticeable increase in volume following the breakout would further strengthen this signal. Many investors interpret such a breakout as a buy signal and position accordingly. This scenario has occurred many times in the past, where bullish breakouts from flag formations led to strong upward moves. Of course, the key is that the breakout must not be a fake out, and price must hold above the breakout level. If this is successfully achieved, the market may begin to establish a new uptrend. Investors need to be cautious at such moments, as breakouts often trigger multiple technical strategies. However, we can't rely on the formation alone to make a decision, so let's take a look at the other metrics as well. Stay tuned. One of the most notable technical structures on the chart is the bearish order block positioned at the top, where significant selling pressure has previously emerged. These zones are typically defined as areas where large investors or institutional traders executed substantial sell orders in the past. As a result, when the price reaches these levels, it often encounters resistance initially. However, if this area is decisively broken to the upside, it signals that a major psychological threshold in the market has been surpassed. In the current technical setup, we see the price moving just below such a bearish order block and approaching it, indicating that a critical phase may be beginning for the market. Bearish order blocks are usually where prices have experienced sharp declines and intense selling pressure. The retesting of these blocks is often driven by market participants seeking to observe the reaction at those levels. The current scenario suggests that this previously strong resistance zone is being retested, and a potential breakout may be imminent. Particularly encouraging is the fact that the price is approaching this block in a steady, volume-supported manner, which increases the likelihood of a breakout. If the price manages to close above this block, it would carry significant technical implications. First and foremost, such a breakout would indicate that the market is no longer under bearish control and that bulls have regained dominance. The ability to break through an area where strong selling occurred in the past suggests that market participants no longer view this level as resistance but rather as a stepping stone. This opens the door to the possibility of new highs. In technical analysis, the breakout of such levels often results in sharp upward movements. This is mainly because a large number of stop-loss orders and opposing positions tend to accumulate at these critical zones. When the price surpasses this level, stop-loss orders from previously short positions are triggered, and many traders interpret the breakout as a buy signal, initiating new long positions. This leads to both a technical and psychological acceleration of upward momentum. Current price action also provides encouraging signs in this direction. In particular, the formation of higher lows suggests strong buying interest in the market. If this trend continues, it's only a matter of time before the price tests the bearish order block. Should a noticeable increase in volume occur during this test, the breakout may be stronger and more sustainable. A volume-backed breakout could mark the beginning of not just a short-term rise, but also a new medium to long-term trend. Additionally, a potential breakout at this level could pave the way for a previously unseen peak on the chart. Bearish order blocks often represent the final resistance points that cause price pullbacks. If this block is breached, there would be little resistance left ahead, allowing investors to set their sights on higher levels. Thus, breaking this level is not just a technical event, but also a signal of a psychological shift into a new phase of the market. Following a breakout, it is also quite natural and even expected for the price to return to this level temporarily for a retest. This retest phase is when investors validate the breakout and restore confidence. If the price successfully holds above the block during this phase and resumes its upward movement without falling back below, it confirms that new highs are not just a possibility, but are becoming a tangible reality. The average true range indicator is an extremely valuable technical analysis tool used to measure market volatility, and its potential upward movement on the chart has recently become a key point of interest. In this context, a rising ATR can be a highly positive signal for investors and traders, as the more the ATR trends upward, the more active, dynamic, and potentially directional the price action is likely to become. Although prices currently appear to be consolidating within an uncertain sideways range, an upward movement in the ATR could signal a powerful shift capable of breaking this stagnation. This often precedes a sudden surge in price or the beginning of a downward trend, but what truly matters here is the ability to positively capitalize on this increased activity. A rising ATR not only indicates an increase in volatility, but also suggests a new sense of dynamism in the market, creating fresh opportunities and clearer entry and exit points. Particularly in tight ranges or narrow price bands, an accelerating ATR can signal an imminent breakout, and in such cases, the probability of a directional move becomes significantly higher. This offers traders the chance to react quickly in the short term, while also allowing for the development of larger position strategies over the medium term. Looking at the current technical setup, the signs of movement observed in the ATR line may be laying the groundwork for a potential price expansion. Especially considering the recent candles that show rising volume and the ATR beginning to trend upward in tandem, this could be a leading indicator of a strong price move. We should wait for the ATR to rise. ChatGPT soar. Yes friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.